We are walking straight into a perfect storm of volatility this week. We have the May Monthly OpEx colliding with a massive triple threat of macro data. Tuesday we get CPI, Wednesday's PPI, and Thursday brings retail sales. Throw in earnings from Cisco, ORCL, and Nebius, and market makers have every excuse they need to rip this market in both directions. But the real black swan is geopolitical. The situation in the Strait of Hormuz and Trump's next moves regarding Iran are hanging over the market like a ticking time bomb. Let me be absolutely clear. If you are stepping into this week's trading session without knowing the exact structural price levels, you are not trading, you are gambling. Let's map it out. Let's do a rapid recap, because last week was a masterclass in why we trade conditions, not opinions. I came into last week with a bearish bias, but I gave you the absolute line in the sand for SPY, the 720 level. Buyers defended 720 every single day. The condition wasn't broken, and SPY rallied to close at 737.5. If you traded your bias, you got burned. If you traded the structure, you won. Now look at the specific setups we mapped out. First, UNH. We highlighted the 370 core wall. It was dead all week until Friday, when it violently broke out and closed at 380. E.L.I. I warned you about the massive 1000 core wall for the monthly OpEx. Look at this. It tagged 1000 to the exact dollar, rejected hard, and flashed straight down to 948. Perfect execution. And MSTR, our crypto play. It pushed to 190, but it's still choking on that 200 core wall. Like I said, we need Bitcoin above 80K for this to really run. Keep it on your watch list for this week. The structure played out beautiful. Now let's map out exactly what you need to survive this week's OpEx. Now let's look at the SPY roadmap. This is where the game is actually won or lost this week. The daily expirations are telling a very specific story. We have a massive core wall stacked at 740, 745, and the ultimate ceiling at 750. On the downside, the heavy-duty protection, the put support, is sitting firm at 720 and 710. But look at the monthly OpEx. This is a masterpiece by Wall Street. They forced everyone to hate this rally. They loaded the board with puts that are now destined to expire worthless. The market makers won, but it raises the most important question for the week ahead. What happens once this massive positioning resets after Friday? We are at a critical pivot point. Right now, the bull is raging. And as an operator, you don't stand in front of a raging bull, you ride it. Here are my two specific scenarios for the week. For the bullish scenario, if you maintain momentum and the bull keeps charging, we're looking to shatter that final 750 wall and print new all-time highs. For the bearish scenario, if the CPI or PPI data comes in hot, look for the hedge. If 720 and 710 fail to hold, that is your bright red flag to get out of the way. The bias is clear, but the levels are absolute. Trade the reaction, not the prediction. If the SPY holds the line and we trigger that bullish expansion, those are the three high beta names I'm riding. First is App, currently sitting at 469. The monthly OpEx shows heavy core walls at 480 and 500. If we reclaim 480, expect a violent move toward 500. And if 500 breaks, the next major liquidity magnet is all the way up at 550. Keep this on a high alert trigger. Next is CrowdStrike. It's at 527 and it has already conquered its major weekly core walls. As long as it holds 500, I'm looking for a breakout past the 567 all-time high. Beyond that, the monthly walls at 580 and 600 are very realistic targets if the market bid remains strong. Finally, ORCL. At 196, the momentum is shifting after the market digests those massive depth fills. We have a cluster of walls at 200 and 210. Once we clear those, the path to 230 liquidity pocket is wide open. The invalidation point is 190. If we lose that on Monday's open, the trade is dead. Watch the tape closely. But what if the CPI data comes in hot and the SPY starts to flush? Those are the names I'm targeting for a deep correction. First, the semi-sector. MU and SNDK are screaming overbought. They've been moving in lockstep, but the music is about to stop. To time this, look at the SMH. We just reclaimed the 550 wall, but we're hovering at 568. If SMH breaks back below 550, the floodgates open. For MU, I'm looking at the macro target of 580, and for SNDK, the target is 1,180. Those aren't one-week moves, but if the sector loses its footing, those targets will hit faster than you think. Then there's spot. It's currently at 417, having already sliced through the 420 put wall. The trend is clearly bearish. If 420 acts as a ceiling and doesn't break back up, the next liquidity pockets are at 390. The options flow suggests we haven't seen the bottom yet. Keep it on a short leash. Now, before you execute a single trade this week, we need to talk about your brain. Most traders lost money last week not because they were wrong about the direction, but because they married their bias. I was bearish last week. I told you that. But because I trade levels and not my ego, I didn't get steamrolled by the rally. The biggest mistake you can make is trying to prove the market wrong. The market doesn't care about your opinion. An operator doesn't care about being right. An operator only cares about being aligned with the tape. If the conditions change, you change. Period. This week is going to be a complete battlefield. You do not want to trade this storm alone. Before we close, I want to acknowledge a milestone. We just crossed our first 100 subscribers on this channel. 100 people who choose execution over noise. Thank you for your trust. We're just getting started, which is why we are taking things to the next level. Head over to elitradingstrategies.com. In less than 2 weeks, the doors are officially opening for our weekly tactical newsletter and the private Discord community. Go to the site, secure your spot, and hit subscribe so you'll be part of the next 1,000. Know your levels, respect the risk, and I'll see you in the next one.